Good morning friends, welcome to Untitled. Today we'll be talking about the financial markets. So the first topic is capital market. What do you mean by capital market? Capital market is a market where buyers and sellers are engaged in the trade of financial securities like bonds, stocks, etc. And if we talk, there are basically two types of capital market. First is primary market and the second one is secondary market. Even after if we further go down, primary market is divided into two parts, that is equity market, debt market, and derivative market. And similarly, secondary market is also divided into the equity market, debt market, and the derivatives. So let's talk about first the primary market. A primary market. What do you mean by primary market? A primary market is a market where the investors and issuers deal in the issue of new stocks. Suppose a company wants money for expansion of its projects. Okay, so what they'll do, they can either go to banks or the financial institutions for raising a loan. Okay, or either they can go live in the share market. So when a company goes public for the first time, it sells its new stocks in the market. So this is known as IPO. It is known as the IPO. So if the company is selling its shares for the first time, it will be known as IPO and it is dealt in the equity market. Suppose a company needs 1 crore, okay, and the price per share that they have taken is, let's suppose, 50 rupees. So the total share that they need to issue in order to reach 1 crore amount will be 2 lakh shares. Similarly, if a company raises money from bond market, that is also known as the debt market. Okay, so that is considered as a loan. Either the company can go for an IPO or they can go for raising a loan. The next one is the secondary market. If we talk about primary market, the company is issuing its shares for the very first time and the investors are directly involved with the company in buying of the shares. Where in case of secondary market, we are dealing with existing or previously issued securities. Suppose I am an investor, I bought shares of ABC company when IPO was launched. Okay, now I no longer want to keep those shares, I want to sell those shares. So what I'll do, I'll go to secondary market. There will be some person who want to buy the shares of ABC company. So now company is not involved. Instead of that, two investors are involved in trading of the securities. So this is known as your secondary market. And now, as we already talked, like primary market is in equity market, debt market. Equity market that we have talked about is IPO, when the company goes live for the first time to raise money. Wherein in case of debt market, we have bond market. So in bond market, what happens? Suppose I'm a company, I need amount of suppose 1 lakh. Okay, so what will happen? I'll go to bond market, I'll issue a bond, and there will be a fixed amount of interest that I have to pay to my investor. It could be semi-annually, half-yearly, or annually, or quarterly, whatever as defined in the norms. So that will be in case of bond market. And the last one is derivative market. That we're not talking, actually derivative market is a different market in itself that involves many other securities like forward, options, and we have futures and swaps, etc. So we'll deal with this derivative market in the later slides. Thank you so much. Please do subscribe to our channel and do like our videos. Thank you so much.